For us Tesla bulls who want to know how many shares it will take to retire and be enjoying Mai Tais in Honolulu by that time, Gary Black's prediction of the company's price in 2030 is extremely important. For all of us Tesla bulls, Gary's research is a major eye-opener, and the more you dig into his model, the more astounding it becomes. In this video, I'll explain why Gary's model is far too cautious and doesn't fully capture Tesla's potential, even though it initially seems quite optimistic. Compared to his model, fewer shares will be needed to retire. Watch to find out why Tesla will surpass Gary's forecasts by a factor of 2. However, we would like a thumbs up before we dive into the conversation. Don't forget to subscribe, Tesla brothers. Let's go over Gary's confidential predictions on what Tesla will achieve by 2030. Remember the following important metrics as we review. The first is the price of Tesla stock, the second is the delivery rate, and the third is the pace of EV adoption. In order to make his projections, Gary looks for these metrics. First, let's look at the big picture. Tesla's stock value. There is much more to the story than Gary's modest prediction of $269 per share by 2030. After we examine the specifics, we'll return to that. The second statistic, the annual delivery rate, will be examined now. Gary anticipates that by 2030, Tesla will have tripled its current yearly delivery rate, hitting 10.8 million vehicles annually. The majority of us are aware that Tesla may easily treble the 10.8 million deliveries by 2030. Thus, this forecast is, once more, extremely conservative. Let's now discuss the most important factor, the rate of EV adoption. By 2030, what percentage of the car market will be made up of EVs? According to Gary, the percentage of people who adopted EVs rose from 3.4% in 2021 to 10% in 2022, 16% in 2023, 24% in 2024, and so on until 2030, when it will have exceeded 60%. To put it another way, he projects that there will be 54 million electric cars on the road globally by 2030. According to him, 20% of the 54 million EVs that will be manufactured and delivered in 2023 will be Teslas. In fact, his estimate includes the notion that Tesla will own a 20% share of the global EV market. The percentage doesn't change between 2024 and 2030. However, it seems to me that Elon is not merely staking his claim to 20% of the market by 2030. He expects to be in charge of a lot more than that. He is right, and so are I and other Tesla bulls. Although I am aware that new rivals will emerge in the future, Tesla is the only name that comes to mind when you think of EVs today. Thus, once more, Gary is taking a very cautious approach. Instead, I would estimate that 40 to 50% of the EV market is controlled by Tesla. Gary Black's projection that the average price of a Tesla will be $65,000 is one of the reasons I believe he is incorrect and possibly overly optimistic. I understand that inflation may cause us to reevaluate what constitutes a fair price for a car, but I believe Elon has been attracting a wider range of customers, including middle-class individuals who are prepared to spend no more than $40,000 on a car. Gary also has high expectations for Tesla's 32.8% gross margins in 2030. I hope he is correct in saying that this is very efficient. Now, let's examine why Gary makes several assumptions that are simply too conservative. The model's primary flaw is that it solely takes Tesla's car manufacturing into account. The fact that Tesla is actively involved in sustainable energy, robo-taxis, Tesla bots, and Tesla insurance cannot be explained. His projected yearly growth rate of 47% is outstanding, despite the fact that he is conservative in his projections because they only include autos. However, as you may have noted, the PE ranges from 61.2 in 2022 to 6.4 in 2023, reflecting a Tesla price of $269. He is not, of course, forecasting that this will be the PE in 2030. I don't think a 6.4 PE in 2030 is fair, but his Tesla pricing of $269 reflects the PE. Assume that by 2030, Tesla's stock price is $269 and its earnings per share are $42. At that point, we may achieve a 6.4 price-to-earnings ratio. He's doing things that way. Later on, we'll explain the stock price or make an educated guess based on his chart. Last but not least, Gary's model projects yearly growth rates of 45% for EV deliveries and 44% for EV adoption, both of which are very reasonable. Let's now use Gary's model as the basis for our own analysis. Gary's model only includes vehicles, as we stated earlier in the video. Between 2022 and 2030, the estimated range for Tesla shares fluctuates between $269 and $270 per share, which is utterly irrational. The model's prediction that Gary will see a 14% growth in Tesla's share count from 3.1 billion to about 3.6 billion in 2023, and that he will have 4.5 billion shares outstanding by 2030, is another item that is just ludicrous. The stock dilution strategy is illogical, and I believe a significant repurchase is imminent, which would actually lead Tesla to issue fewer shares rather than more. Simply put, it doesn't add up. It's ridiculous if Tesla still needs to dilute in 2030 while generating over $200 billion in net profits. They're simply stealing money without any justification. They should be granting buybacks rather than dilution given their $200 billion net income. However, we must remember that this is merely a prediction, and it appears like Gary Black is once again exercising conservatism. Since the man is solely investing in cars, shares that are outstanding and the principle of share dilution may make more sense. As we can see, the market capitalization continues to rise while the stock price remains constant. Let's discuss the stock price in greater detail. Again, the stock price is $269 in 2030, but that's only because of the peculiar manner he determines PE. Black's stock price forecasts begin to make sense when a reasonable PE is used. For instance, Gary's model produces $552 per share with 69 PE is used for 2023, which makes sense given that Tesla has a $1.9 trillion market capitalization. To put it another way, Gary Black estimates that the company may trade at a price objective that more than triples its present trading price in 6 to 12 months, which isn't bad. Let's examine 2024 at a 69 PE in 2023. With a market valuation of $2.54 trillion and a PE of 55, which is reasonable, the price would be about $632 per share. Black has only been involved in Tesla's auto manufacturing, therefore a market valuation of $2.5 trillion and a yearly PE of $45 billion are realistic goals. In 2024, $632 per share sounds like a good price. As of right now, 2025, I believe the most important thing to remember regarding the 2025 share price is that Gary has Tesla's earnings soaring year after year, from $46 billion to $66 billion in a single year. It's unbelievable, a $20 billion increase year over year. And the PE will fall sharply as a result of such a large increase. In light of this, the PE for 2025 would be 45, which would result in a stock price of $720 and a market capitalization of about $3 trillion. Let's go on to 2026. If I give it a PE of 40, the stock price will be $832 per share, which is an amazing 4x or 4.5x in 3 years. And that's just for cars. And once more, the goal of all these computations is to maintain conservatism. Let's add FSD on top of this to make it a bit more bullish, which is feasible in my view. Since FSD prices are rising, let's establish an average of $12,500 for the cost of an FSD car in 2022. Many bears believe that FSD won't be worth $29,000 in 2030, and they have already risen to $15,000 this month. In 2020, the cost of a standard FSD was $8,000. The initial sum, which was $8,000, now increased to $15,000. I predict that it will double in the coming years and quadruple by the end of the decade. But because $15,000 is a fair price for Tesla, we'll stop there. We'll use that figure in this chart to forecast that the FSD profit margin will be over $1.2 billion, as the data indicates that a 48% profit margin in sales of over $2.5 billion in FSD will increase by 2% yearly. With an additional $2 billion, the net income will reach $15 billion, or $303 per share, with a PE of 61. The stock price may therefore rise significantly, with the addition of FSD, reaching $625 in 2023, $729 in 2024, $834 in 2025, and $972 in 2026. In 2030, however, when the company's stock price will be $1,282 and its market capitalization would be close to $6 trillion, things become really insane. Yes, folks, the value of vehicles alone has already increased from $10, $15, $20, and $30 per share, and SSD is helping us add an additional $230. That would be amazing, wow. However, there is more. By 2030, you'll have made an incredible tenfold rise, assuming that the current price of Tesla stock at the time of recording is roughly $133.42. I'm not sure about you, but I think it makes sense to invest heavily in Tesla stock. Guys, knowing this makes the Mai Tais in Maui appear even more authentic. I think it looks good, but keep in mind that this is all speculation and that nothing in the world of investing is guaranteed. Gary Black projected $550 per share over the next 6 to 12 months, based on a PE of 69 in 2023. Let's wait and see if this becomes a market. This is a bad one. We could go to $500 or $412 months if things get better. This is comparatively low, however, when compared to $550. In summary, assuming a price-to-earnings ratio of 25, the market capitalization of automobiles is predicted to surpass $1,000 per share in 2030, a fourfold rise from its current level. By 2030, we increased the share price by $230 in FSD, and we also included robo-taxes and